Our next startup is called Aeloi, and they're going to be sharing a solution to allow for the monitoring of micro-business loans end use. Aeloi, are you ready to go? You have 5 minutes for your pitch. Are you ready?
Yes, thank you.
Your 5 minutes starts now.
The global microfinance market is projected to reach $300 billion in 5 years, growing at 15% per year. At the same time, in the ASEAN region alone, there's a $200 billion credit gap for MSMEs. One of these 400 million underserved micro-entrepreneurs is Lakshmi, a buffalo farmer in Nepal. She needs capital to expand her buffalo cheese business, but legally she doesn't own any collateral, so microfinances wouldn't give her a loan. She also can't afford a 40% interest rate informal loan. Micro-entrepreneurs, especially women, often cannot access affordable financing because they lack credit history, formal employment, or legal ownership of any assets at all. Essentially, they can't grow their business because few trust their business abilities. Aeloi's mission is to unlock this trust using technology. Our solution is a software for financial institutions. We help issue micro-business loans in digital tokens, which can only be spent at accredited vendors. So an agriculture loan can only buy from agriculture vendors. For example, in our pilot last year, our client financial institution lent out $11,000 of their own capital using our digital tokens to 18 farmers. With the digital token loan, farmers bought goods and services from vendors such as livestock medicine or agriculture training. The vendors then redeemed the tokens into cash from the financial institution. Within 1 year, the loans and interests were fully repaid. For microfinance institutions, we lower field operations cost by automating manual loan use monitoring. For micro-entrepreneurs, we enable access to affordable supply chain input financing. For vendors, we bring customers with good credit. Using digital tokens, our system provides real-time loan insights, like an automatic audit. We help foster freedom for women, especially by having more financial control and providing an alternative to alternative credit scores. Our phones work with our platform through SMS or an offline app, so there's no need for smartphones or mobile data. That makes us easily scalable and more inclusive. The microfinance industry still largely relies on pen and paper. We can help change that and help bridge the $8 trillion global MSME credit gap. Our database provides real-time data visualizations of how borrowers spend at vendors. We use this information to form credit scores. We have APIs for easy integration and moving into a blockchain to further enhance security. We have a software as a service business model with 3 revenue streams. 1 from vendor commissions like credit cards, we're bringing customers with paying ability. 2, a subscription fee from financial institutions. And 3, in the future, we will use our ecosystem to become an investment platform. We help investors interested in incentivizing specific sectors, such as women, entrepreneurship, or renewable energy, channel financing directly to targeted micro-entrepreneurs. We then charge a percentage fee. We are a B2B2C platform. So our entrepreneur acquisition strategy is to partner with financial institutions and reach their borrowers. Currently, our partner is the largest microfinance bank for women in Nepal with 35,000 members. We're also finalizing MOUs with potential clients to expand to 15,000 farmers with loans totaling $9 million in Ghana, Tanzania, and Cambodia next year. In the next 2 years, we aim to expand to 3 countries, targeting 50,000 users, making sure our platform can be easily adapted by MFIs. In 5 years, we'll become an investment platform driven by big data, with an accredited network of vendors, micro-entrepreneurs, financial institutions, and impact investors in 10 emerging markets. Our product is focused on increasing input financing for MSMEs, while digital wallets and mobile money are transactions focused. Our defensibility is in our trusted network, where investments are locked in for critical assets. Our system cements linkages between financing and inputs, so we are more vertically integrated compared to e-voucher systems. I am Tiffany Tong, CEO. Sonika Manandar is our CTO. We met at Singularity University in Silicon Valley. For 20 years, we have grown our skills in data and technology at the World Bank and Microsoft Innovation Center in Africa and Asia. So far, we have grown our talented team to 12, launched 3 pilots, and won 8 awards. Aeloi's vision is to unlock private capital so that each dollar of investment transforms micro-entrepreneurs like Lakshmi and her buffalo cheese business. Thank you.
Thank you very much, Aeloi, for that wonderful presentation. And now we have 5 minutes on the clock again for a Q&A with the judges. Aeloi, I hope you're ready. The first question comes from Hugh. Over to you, Hugh.
Tiffany, great presentation. How are you thinking about scaling to multiple financial institutions, and what's been the feedback from your early partners? Thanks.
Thank you for the question. So far, our feedback has been really good. Microfinances often don't have software that they can use to monitor their loans. So this is a very new thing for them. So our strategy is to reach out through umbrella organizations and also through investment funds. So there are investment funds that help microfinances have loan guarantees, for example, and then through them we can introduce this technology.
Thank you. Our next question comes from Brian. Please state your question, Brian.
Great presentation, Tiffany. What is your adoption strategy, particularly for those who are less tech savvy? Over to you.
Absolutely. Our product is very much focused completely on the people who are using feature phones and really have very low digital literacy. So all of our materials are designed to be audio and video. The text that they have to enter into the SMS is completely numbers, which usually is understandable compared to letters. And we're also developing an offline app and an IVR system that can help people that have very low financial literacy and literacy.
Thank you for your answer. Now, our next question comes from Mark. Mark, your question, please.
Yes, great presentation and great initiative. What's your barrier to entry? What might make you be less successful?
Yes, we believe our barrier to entry is our vendor ecosystem linked with the MFIs. So right now there is very few, especially in different sectors, that are able to scale in different sectors, directly linking these two. And in the future, when we can bring in the impact investors, that will further strengthen our ecosystem. We're also working on very much automating the process of how we can verify the vendors, because that is a bottleneck for us. So making sure that we have automatic systems like peer ratings to make sure vendors can come onto the platform, they're peer rated, and then their performance to the borrowers are tracked consistently, and we can deal with any problems with real-time data.
Thank you for that. We've got about 2 minutes and 45 seconds still on the clock. Winnie now has a question. Over to you, Winnie. Winnie, you need to unmute your mic. We can't hear you. There you go. Your question, Winnie.
Hi. Hey, my question was actually about the same as Mark. I wanted to ask what would be your biggest barrier to entry, but now that we've established what it is, so what is the strategy to addressing that? Thank you.
Absolutely. We're definitely trying to design the product for every stakeholder in the platform. So for vendors, there is a very strong argument about bringing customers with good credit, because right now a lot of these vendors actually give out their goods on credit already because their customers are not able to pay at the start of the season, for example. They have to wait until at the end of harvest. So we're bringing the system where we can, like a credit card, bringing in customers that have credit to them directly, and we're able to market their goods and services directly to the customers. And at the same time, because they are quite fragmented and themselves are not very tech savvy, we have to find ways to develop an agent model and also use technology like IVR and through SMS to be able to onboard them using those technologies so that we can develop credit scoring even for the vendors.
Thank you for that answer. Next up, we have Tinkit with a question. We've got about 1 minute 15 left on the clock. Tinkit, over to you.
Yeah, thanks, Tiffany, for the presentation. I like the idea of using the vendors. Just to understand a bit more about your credit scoring methodology, can you just give it a bit more detail?
Absolutely. So we are not focused on credit scoring right now. We like to say we're an alternative to alternative credit scoring because our system helps keep the money within the ecosystem that helps generate trust. In the future, though, once we have all of this data, because traditionally microfinances only have 2 points of data, essentially, how much they lend out and when and how much comes back in. And we're able to break that data down much more specifically. So using that data, our theory is to be able to credit scores both the vendors and the borrowers to grow this ecosystem.
Thank you very much. Thank you, judges, for your questions. And thank you, it's once again Aeloi for answering our questions, and all the best.